Bitcoin ETFs are changing the game. In the last 24 hours, institutional investors have poured billions into Bitcoin ETFs, and the market is reacting fast. But what does this mean for Bitcoin's price? Are we about to see a massive breakout, or is this just another hype cycle? The facts. 1. BlackRock's Bitcoin ETF just hit record-breaking inflows. 2. Fidelity and Grayscale are also seeing huge institutional demand. 3. Traditional investors are finally waking up to Bitcoin. But is it too late? Experts are saying this ETF boom could be the fuel Bitcoin needs to reach $100K. But there's a catch. Whale wallets have been moving massive amounts of BTC recently. Are they preparing for a dump? With Bitcoin currently trading around $84,000, the next few weeks could be explosive. Will we see a breakout, or are institutions setting up for a trap? Understanding Bitcoin. ETFs Bitcoin. ETFs are exchange-traded funds that allow institutional and retail investors to gain exposure to Bitcoin without actually holding the asset. These ETFs have brought billions of dollars into the crypto market, but how do they really work? 1. Spot ETFs versus futures ETFs. Spot ETFs buy actual Bitcoin, whereas futures ETFs trade contracts betting on price movements. 2. Why this matters. Spot ETFs create real demand for BTC, which reduces available supply. 3. Regulatory impact. The SEC approving these ETFs signals growing legitimacy for Bitcoin in traditional finance. Some experts believe that Bitcoin ETFs could eventually absorb trillions in institutional capital, rivaling traditional assets like gold. But could regulations or unexpected market events slow this progress? Institutional investors are changing the game for years. Bitcoin was seen as a risky investment, but today, hedge funds, pension funds, and Fortune 500 companies are getting in. Why? Key institutional moves. 1. BlackRock. Managing over $9 trillion, their ETF has already accumulated over $10 billion in Bitcoin. 2. Fidelity. Their ETF is growing rapidly, and they are expanding Bitcoin access for their institutional clients. 3. Grayscale recently converted its GBTC fund into a Bitcoin ETF, unlocking new liquidity. 4. MicroStrategy continues to buy massive amounts of BTC, holding over 200,000 BTC in reserves. The supply shock. Why this ETF boom could be massive. Bitcoin has a fixed supply of 21 million coins, and over 19.6 million have already been mined. ETFs are absorbing thousands of BTC daily, reducing circulating supply. 1. Less BTC on exchanges means higher prices. 2. Long-term holders aren't selling, creating further scarcity. 3. Institutional demand will only grow as more funds enter the space. Historically, when supply becomes constrained, prices explode. Could this be the moment Bitcoin finally surpasses $100K and beyond? Potential risks and bearish signals. Despite all the bullish signals, we can't ignore the risks. Whale activity and market manipulation. 1. Large Bitcoin holders, whales, have been transferring massive amounts of BTC to exchanges. 2. This suggests a possible sell-off to take profits before another big move. Regulatory challenges. 1. Governments could introduce new laws that limit Bitcoin ETFs or increase taxation. 2. The SEC still has the power to slow institutional adoption with stricter rules. Macroeconomic uncertainty. 1. Inflation, interest rates, and global financial crises could cause volatility in all markets, including Bitcoin. 2. If traditional markets crash, Bitcoin could see short-term sell-offs before long-term recovery. Bitcoin price predictions. Can we see $150K plus? Many analysts believe Bitcoin is on track for a massive breakout, but where are the realistic targets? Price predictions from experts. 1. Plan B, stock-to-flow model, predicts Bitcoin could hit $150K, $250K in this cycle. 2. Michael Saylor, MicroStrategy CEO, believes Bitcoin will eventually surpass $1 million. 3. JP Morgan and Citi analysts, more conservative, expecting BTC to hit $100K, $120K. With supply getting tighter and demand increasing, Bitcoin reaching new highs seems inevitable. But will it happen in 2025? Conclusion: should you buy Bitcoin now? With institutions pouring money into Bitcoin ETFs and supply getting tighter, the long-term outlook is undeniably bullish. However, short-term risks remain. Final takeaways. 1. Bitcoin ETFs are absorbing BTC at a record pace. 2. Institutional adoption is stronger than ever. 3. Supply shock could drive BTC past $100K. 4. Short-term corrections are still possible. Stay informed and manage risk. What do you think? Will Bitcoin break $100K in 2025, or is a correction coming first? Drop your predictions in the comments. Like and subscribe for daily crypto insights.